Good evening and a warm welcome to a new season of Big Budget Business, where we highlight the lives of prolific young people making strides in their respective fields. Now, we saw it fit to start off this new season with an informative interview about Botswana's proposed tax regime. What exactly are the implications for me as a young person in business or for me as a young professional of this new tax system? So today we'll be speaking to a tax specialist, Mr. Tumelo Rannau, who will be giving us a bit more information about this issue. Mr. Rannau, welcome to the show.
Thank you. Pleasure to be here.
It's a pleasure having you. Right, so maybe let's start with an introduction of yourself, your background, whatever you'd like us to know.
Yes, Tumelo Rannau is a 29-year-old boy from Sorowe. Was born there, went to school there for 10 years, then went to Moen College in Zopong. After that, I went to Botswana Accountancy College, where I did my degree in accounting and finance. That's where my love for tax developed.
Okay.
And then joined the big four accounting firms, 2 of them. Then from there, yes, focused on the tax platform. I'm married, have 2 kids.
Great.
I'll be doing my 4th year in December.
Oh, wonderful, wonderful.
So,
right.
Yeah, basically that's Tumelo for you.
Lovely. So it's a pleasure having you, and congrats on 4 years. All right.
Thank
So
you.
tell us a bit about your work as a tax specialist and the tax platform. What are your services, maybe for the individual and then also for young business people, for SMEs?
Yes. So the tax platform, we have a tagline, informing the nation on tax matters.
All right.
As the tax platform. So we focus on every tax type that you can think of income tax, transfer duty, value-added tax, withholding taxes. So we try to break down them for people to understand them. Yeah, on social media, we are there to teach, and also we can be contacted for some advice on how you can do certain things. If you have any transactions, we will advise you on those transactions. If you have compliance issues, filing of returns, computations, we'll provide those for both individuals and even for small businesses. Because you can, as an individual, you can operate as a sole proprietor, or even as an employee, you can have tax issues. So we're always available to help in those sectors. So it's not all about the compliance section of filing returns.
Yes.
So we even help you in what kind of documentation should you keep, why you should keep it. Yeah, and all those, and help you in achieving efficiency.
And I think you really answered that, because I was going to say, it's a lot more than just submitting my return at the end of the year.
Yes. I think one of the things that people think is tax is all about, filing returns, getting your tax clearance certificate.
Yes.
If you are registered, you are fine. It's about 12%, it's 22% if you have abroad those rates, then you are fine. But it's more than just that.
All right. So maybe from a broad perspective, why would you encourage youth, and particularly those who are in business, why would you encourage them to take taxation matters more seriously? As you were saying that it's more than just the returns.
Yeah, it's more than the returns, the tax clearance certificate, and you applying 12% or 22% depending on which tax you are dealing with. There are risks that comes with tax. Can be a financial risk or a reputational risk.
Okay.
A financial risk will come where you have not filed your returns or you do not have certain documentation. If you read in the newspapers, you'll see that some companies will be charged large amounts of tax simply because they didn't keep some documentation, and then BES came in and said, no, we are going to estimate how much profits you have made based on the companies that are in your line of business.
Yes.
So if you don't,
the Botswana
Unified Revenue Services.
Sorry,
yes.
to interject.
So so they say we'll estimate your tax liability and we'll give you that bill. But who knows? Maybe you are making losses and you are not in a profit. But if you are not keeping documentation, then you're going to get in trouble while it wasn't necessary. So it's important for you to keep documentation.
Yes.
Ensure that whatever is there in the act that says you should keep, you should keep. Yes.
because you're saying that if I don't keep some of this documentation, there's a chance that if the taxman actually estimates my tax, I could find myself paying more than
more than you're supposed to pay. Yes, and the acts empower them to do so.
Wow. So I might have no recourse thereafter.
Yes. So even if you can challenge it in court, the onus will be on you to say, I have 1, 2, 3 documentation, which you should have kept. But if you haven't managed to give it to BRS, are you going to produce it in court?
Yes.
And also it wastes your time,
Of course.
your money in going to court and trying to plead and prove that that tax liability is huge. So it's more than just the percentage, the tax clearance. You need to know that which kind of documentation you have to keep and make sure that you keep those documentation. Like for transfer duty, you have to keep for 10 years, for income tax 8 years, for VAT 7 years. So you need to have a proper record keeping.
So all of these returns that my organization is filing, I should ensure that they're properly filed.
They're properly filed.
I don't just put them away and think, okay, I'm done for this year.
Because that's what you call tax audits.
Yes.
So BES can come in and say, look, we've received your return in 2010 and we want to audit and see what you've really given us in the return is true and correct.
Wow.
So then they'll say, give us 1, 2, 3 documentation.
Yes.
If you don't have it, there are also penalties for you not to keep those.
Of course.
So probably they'll charge you penalty for not keeping those documents. And over and above that, they'll estimate the liability and say, we think you should be paying this amount of tax because companies 1, 2, 3, 4. Normally they pay this amount of tax.
Wow.
Yeah. So
that's
it's
double
very
trouble.
important. Double trouble for you.
So I think you've touched on that aspect of financial risk. You said there's also reputational
risk.
Okay.
Of course. I mean, if you don't pay tax as a business or as an individual, it tarnishes your brand.
Of course.
It tarnishes your brand. You will appear in the newspapers, and now in the era of social media, your face will be all over Facebook.
Yeah, that's true.
Dumisani, the director of this
Also
company, is not paying tax.
Yeah.
Best wants him. They can't find him. Stuff like that. So it damages your reputation.
Absolutely.
So and it can also threaten your going concern as a business because if you are making money, of course, and you do not pay tax, then the tax that they've estimated and the interest, because the interest and the penalties, they can go up to 200% of the liability. The interest can be more than the liability you were owing.
Wow.
And the penalty can even be more.
Wow.
So they can close you down.
So it's really important for us to take these matters
So
seriously.
it's really important for us to take these matters.
All right. So I'm sure we can hear back at home that it's important for us to ensure that we keep all of our tax documentation in order to avoid both financial risk and reputational risk. All right. So there are some changes that we hear are coming into our tax system, basically as per our Minister of Finance and Economic Development.
Yes.
Now, I want us to get into each one of maybe the headlines of each of these changes so that we understand what they are and what the implications of these are. Right. So the first one, we understand that value added tax, VAT, will be going up from 12% to 14%. What does this mean?
Yes. Right. Yeah. Firstly, let's just talk about what VAT is.
Right.
So we normally define it or explain it as a consumption tax that is levied on the final consumer of services and goods. So who is the final consumer of goods and services? It's me and you as an individual. Then if you are a company or you are an organization that is not registered for VAT, then you are also a final consumer because you are the last person to use those goods.
Can I interject there? You said if you're an organization that's not registered for VAT. So there's a difference between VAT registration and tax registration.
Yeah, yes. Like for tax registration is broad, then you have income tax registration. Everyone has to register for income tax regardless of whatever amount you make. Then when it comes to VAT, you can only register if you have sales of over 1 million
Okay.
annually.
Annually, over 1 million Pula.
Over 1 million Pula.
All right.
So if you are not making over 1 million Pula in business income, then you're not supposed to register for VAT.
All right.
You
Thanks
are
for that.
considered a small enterprise. And if you reach that revenue, then you can register for VAT. So essentially businesses do not pay VAT, but they collect VAT on behalf of the government.
On behalf of the government, all right.
Yes.
Oh, that's great.
Perfect.
Okay, so we're talking about the hike from 12 to 14.
To 14. Yes. So in terms of Section 78 of the Value-Added Tax Act, the Minister of Finance can adjust the VAT rate, and the adjustment at any point in time is limited to 2%.
Okay.
So it can either reduce or increase
By just 2.
by just 2%.
All right.
That's the maximum. Going back to August 2020, there was the Economic Recovery and Transformation Plan that was tabled before Parliament.
Okay.
And that's where the idea of increasing VAT started from, because they were saying, what are the financing mechanisms that we can use to finance the budget and the aspirations that we have in this economic recovery plan? And VAT was mentioned. Initially, then in the ERTP, they had proposed that they can increase by 1% over 2 years.
Okay.
Yes, so we're expecting that this year they'll say 13%, then in 2022 they go to 14%, but they have since, let's just go to 14% straight away.
And of course, the ERTP, this transformation plan, dates back pre-COVID. So it's not something that just came as a result of what's happening right now with the economic challenges we're facing because of COVID.
Yeah, it came midway. Through COVID.
All right.
I think it was around June, May.
Okay.
That it was drafted.
All right.
So it's part of making sure the economy recover also from the COVID shocks,
Mitigation measures. All right.
all the proposals that are in there. So the question is, what does this mean for me as a consumer?
Exactly.
That means the goods that you've been buying, the milk that you've been buying, the bread that you've been buying at your store in your locality, will go up by minimum 2% because we're a free economy.
Yes.
The economy has been affected. Businesses might also increase by their own percentage. So it might not just be the 2%, but obviously it will be increased by at a minimum 2%.
Because they have to factor in their costs too.
Yes.
Right.
So that's what it means for me and you as an individual, as a business that is not VAT registered. That means your inputs, whatever you buy, your cost will increase by 2%.
So things are going to get slightly more expensive.
Things are going to get more expensive.
Right. So I think that's something we need to factor into our budgets, both personal and business, to see that we incorporate room for slight increases in the prices of goods and services.
Definitely.
Okay.
Yeah.
All right. So let's talk about the increase in the fuel levy. Yeah, I think that one's something that a lot of us are worried about.
Yeah, so the fuel levy is charged in terms of the Control of Goods Act,
Yes.
Petroleum products. So there is a levy that has been 12 thebe per litre.
Yes.
So now it will increase to 1 Pula, 12 thebe per litre. It's increasing by 1 Pula. So your fuel costs from 12
1
thebe
Pula 12 thebe.
to 1 Pula 12 thebe. In the past, I think it was reduced. It used to be around 13 thebe. There was a point it was around 16 thebe, 18 thebe.
Okay.
And then it has been reduced. Now it just shot by even more than 100%.
That's a substantial increase.
Yes, to 1 Pula 12 thebe. So that essentially it means your fuel costs as an individual, your fuel costs as a business will increase.
Wow.
So that's something you have to factor in when you do budgets. I know businesses and even as individuals, we do budgets. Mostly businesses will do budgets at the beginning of their financial year. So it's something that they'll have to factor in if they haven't already done that.
All right. I take it we get that too. It's about to be more expensive for us to be driving. If you don't have a bike, perhaps get one. I've been told I should get one for my weight. But anyway, all right, let's talk about...
walk.
Oh, yes, exactly. Or walk. Let's talk about this issue of no tax for the first 48,000 Pula, something like that. What does that mean?
Yes. So this applies to individuals.
Okay.
So currently, it's 36,000.
Okay.
That means if you are earning anything less than 36,000 annually, there's no tax on that income.
Okay.
So now they'll increase it to 48,000.
Okay. Okay.
So it means all the rates or the thresholds will have to be adjusted. So my prediction is that the next threshold will be 48,001 to 96,000, which now 5% will apply. Then the following one will be 96,000 to 144,000, which now 12.5% will apply. Then 144,000 to 192,000, 18.75% will apply. Then 192,001 and above, 25% will apply. So why bring in this? There's this thing that we call the bracket creep.
Okay, bracket?
Yes, bracket creep. It was also mentioned in the Economic Recovery and Transformation Plan. So what bracket creep essentially means is, say, the wages are low, but sometimes you have what we call inflation adjustments to salaries, not necessarily increases, but to say there is inflation, so the wages has been eroded.
Yes.
So let's adjust, the government will say, let's adjust by 3% or by 6%.
Of course.
Yes.
And we've had some recent ones in the past, was it true? So yes.
Yeah, and then, but the real inflation will be more than the adjustment that has been made. So your salary will be adjusted by inflation, but will take you to a higher tax bracket. So you still go back.
It's punitive for you as an individual.
You still go back to the same amount that you are left with. So you can either fix that by increasing the real wages, which is your salary, maybe making an adjustment that is more than inflation, increase by 10%, 15%, 20%.
To compensate for that.
Or you can use tax to fix that.
All right.
So then that's where this threshold comes in of increasing it. So giving you an example of someone who's earning 13,000 per month.
Okay.
Currently, if you are earning 13,000, you are taxed at the highest tax bracket. That's the 25%.
Okay.
Yes. And currently your tax per month will be 1,337.50.
Okay.
Yes. But from July, after this is implemented, your tax will move to about 887.50 on that 13,000. Meaning you have now saved around 450 as a tax saving.
Okay.
Yeah, so you are actually, someone will be moving from a higher tax bracket to a lower tax bracket.
Okay.
So someone who's been earning 4,000 currently, the 1,000 is taxed at 5%. But now if you are earning 4,000 and less, there will be no tax at all.
So this basically has a good effect for my discretionary income then as an individual in my household because I'm taxed a bit less.
Yeah, it will cushion you.
Okay.
Yeah, it's not much. Of course, ideally, if you do the inflation adjustment only 3,000, you can realize that currently it ranges between 4.8 to 5,000, which would be the ideal adjustment. So that's 48,000 ideally should be 60,000. But I think they then balance the COVID shocks.
Yes.
Say let's cushion them, but our revenue has been affected, so let's not do a big adjustment. So I think it balanced the pressure on government revenue and the pressure also in individuals to say, okay, I think this can work for both parties.
So we had to compensate for both sides.
Yes.
All right. No, that's great. How about the levy on sweetened beverages related to their sugar content?
Yes. So this levy on sweetened beverages is pushed by the World Health Organization, and tax is also one of them because tax deals with behaviors. They can try to control behaviors.
Of course.
So then this one it deals with sugar-related diseases. But the sugar tax, in our case, it will be on sweetened beverages, specifically. It will not apply over everything that has sugar, but specifically to sweetened beverages. So if you talk your soft drinks, also your concentrated drinks, and no, I think if for juices, they might be exempt altogether, or only exempt 100% juices, because there will be some juices that has sugar content that is higher than the set limit of 4 grams per 100 milliliter. Yes. So that means if if one has 10 grams, the 6 will result in an increase in your specific drink that you normally buy. So on average, a 500 milliliter soft drink will increase by 75 tebe after factoring in VAT. And it can even be more because they'll probably make their own adjustments. So your 1 Pula, your 2 Pula, in terms of the 500 milliliter can or 500 milliliter bottle.
Right. So in essence, this is, you mentioned something about behavior. They're trying to influence those of us who like sugar too much to start spending a bit less.
But it's indirect in the sense that it's difficult to influence human behavior.
Individual and household behavior.
Yes, it's difficult. They'll continue to buy their favorite drinks.
Yeah.
So it's punitive, of course, on the manufacturer or importer because it increases their costs.
Yeah.
So how it will work is that after manufacturing, you have to declare to the BURS, the Botswana Unified Revenue Service, to say, I've manufactured such amount volume of drinks, and this is the sugar content.
Yeah.
So this is the 5 million of my production for this month. Or if you are importing, they'll say, what's the sugar content? Assess at the border, charge to your customs statement, and then you'll have to settle that. So it's not just on manufacturers, but also on what you will import. Yeah. So by it being punitive to the manufacturers and importers, they are saying to them, we want to encourage you to reduce the sugar content. There is what we call the carrot and stick mechanism in the tax field. So, I mean, everyone wants to do their tax planning such that they pay an amount that is less. Yes. So they're saying,
I'm not sure if it's correct for me to nod my head or just stay silent on the matter.
Yeah, you can nod your head. So they're saying, look, we are going to come with a punitive mechanism that will entice them to reduce the sugar content. Because if you reduce the sugar content, your tax bill will go low. Yeah, because yes, we can say the tax is paid by the consumer because it's factored on the price of the goods. But I can produce that drink and it will be in my warehouse and there are no sales. When there was a lockdown, most people were not operating and we are not allowed to go home. I've done my production, they are at the stores, but people are not allowed. So I've incurred that cost. I haven't recovered it yet because someone has not paid for it.
That's right.
So yes, I'll recover it from the customer, but essentially it's borne by the manufacturer or the importer.
Okay.
Yeah.
That's great.
So it's an indirect mechanism, I can say.
Let's talk about the issue relating to plastic bags. What's the story there?
Yeah. The legislation was introduced back in 2007.
All right.
And I think when it was drafted, they didn't think about who's going to collect the collection mechanism. So the amendment that will be coming will be focusing more on the collection part.
Okay.
You say, because shops have been collecting the plastic
label.
Yes, and in some big retailers, it was a big audit issue.
Yes.
It was a big audit issue, but then they'll say, what does the legislation say? Who receives it? They'll call Bears and Bears say, no.
That's not
our
jurisdiction.
We don't know anything about that. So it was a big contention.
And that's a significant and a substantial amount.
Yes.
If it's 50 tebe plastic, and how many people walk into that retailer on a daily basis, let alone monthly and yearly.
Yeah. Wow. So it was a slip by government not to correct that and ensure that there is a collection mechanism in place. And now, because there is pressure in revenue, I think they then said, no, we need to fix this and start collecting. And of course, we are a free market economy. So the 30 tebe or the 50 tebe that you've been carrying might not just end there. They might increase it. But then based on the legislation, maybe it might just limit it to the 30th or the 50th time. We'll see when the legislation comes how they'll draft it.
All right, thanks for that. And then lastly, we heard that there was something about a levy on second-hand vehicles that are being imported. What is this?
Yes. So in terms of this levies, earlier I talked about behavioral control. So normally for environmental levy, because it will be sort of an environmental levy, or maybe protecting the local manufacturer of goods. But we don't have car manufacturing plants here, so it's more on the environmental side, because those are the two reasons that's normal they use to introduce such kind of levy. So it will be on imported second-hand vehicles. So if you import a new car, then it won't apply, because they're saying if the vehicle is old and it's not new, then it will have more emissions. But that's not really the case most of the time. But generally, that's the perception, that if it's old, then the higher the emissions. So that's why they are targeting, and we'll see how they draft it, because normally it will depend on the carbon that is emitted by that vehicle. But I don't think applying the same rate will be objective, and it will be punitive, because not all of them are equally emit the same carbon emissions.
It's hard to really tell which one contributes more damage to the environment.
Yes, so I think those are the things that they should look at when they draft the legislation, because what the minister said is that they're still looking into a mechanism of how to do it.
All right, so they're working on something.
They're working on something. So I hope they will touch on those things, because there's what we call equality in tax.
Equality in tax.
Yeah, every legislation that is drafted, there has to be equality. It doesn't have to be punitive to others. To one side. Yeah. So and of course there is the withholding tax on dividends.
Yes, very right.
So the withholding tax on dividends in 2011, before it was changed, it was around 15%.
Okay.
Then it was slashed by 50% to 7.5%. And at that time, I think it was during the economic mess that we were in, back in 2008 and 2010. I think that's why then they decided to slash it. And also at that time, it was time that Mauritius was rising as an economic giant and as the go-to guy when it comes to tax, favorable tax rates. So I think that's where the tax competition came in. Then they said, let's reduce to 7.5 to come closer to them, to compete with them. As you know that we have an IFSC.
Exactly.
So we're trying to compete with them on that space. But of course, we need revenue. The government is revenue said, okay, let me adjust by 2.5. So what it essentially means is if you've been paying shareholders 100,000, currently 7,500 will go to the government coffers, and you only receive around 92,500. But now as a shareholder, you only receive 90,000, and the 10,000 will go to the government coffers. So, but I think the 2.5 is not a bad increase.
Yeah. But then again, you know, the larger amount of shares, larger percentage of ownership you have, your returns will be
diluted.
Yeah, right.
That means whatever is coming back to you will be less. But
we press on.
What can we do?
No, thank you very much. That's been quite informative. I think we've noted a lot from this interview in terms of how we need to ensure that our taxes are in order, our documentation is in order to maintain our financial and reputational standing, right? And then also how some of the impacts that you've touched on, the implications of these different amendments and this new tax regime. So maybe I want us to understand how people can reach you for further assistance, maybe as a person in business or an individual who wants to get their taxes in order. How can we reach you? And what means, how do you usually communicate your tax issues out there?
Yes, as the tax platform, we have social media accounts.
Okay.
We're on Facebook, we're on Twitter, we have a YouTube account. We are also on WordPress at the taxplatform.tax.
Okay.
So people can always read about what we write about. And they can also send us messages on those social media platforms, contact us, but they can also contact us on 74 34 28 23. Yes, for assistance. But apart from just writing and helping you with your general tax issues, we have these books.
Okay.
This is the Farmer's Tax Handbook, which is the latest offering from us,
Okay.
which was published in 2020. So it's all about taxation for farmers.
For farmers specifically. Oh, that's great.
So if you're into farming, you can contact us. This one goes at 150.
Okay.
Then there is this one, taxation of not-for-profit organizations. There is this misconception that when it comes to not-for-profit organizations, there is no tax to deal with.
But there actually is.
There actually is. So you need to grab this one at 250.
All right.
Yeah, so you can contact myself or contact the OperaCon at 7181 5836.
7181
5836.
All right.
Yes. So these ones are for you, Mr. Misai.
For me, personally. A gift.
Yes.
Thank you very much. Thank you very much.
You're welcome.
You saved me a lot in taxes also.
Yeah.
Thank you so much. Much appreciated. Let's see how we can get our hands on this informative information regarding farmers' tax and taxation of not-for-profits. And it is quite a myth. And it's something that people really believe that NPOs, NGOs, there's really no taxation there. Yes. So we need to understand that these tax matters are real. Mr. Rannau, I'd like to thank you very much for your time. Thank you very much for this informative session, and I'm sure a lot of people will reach out to you for further information. And let me thank you once again for this gift. People really get gifts, and this means a lot to us as the team.
Welcome.
I'm sure a lot of the people on the team.
That's my Valentine gift to you.
Exactly, and especially because my birthday was the 1st of January. We're not too far out.
Yeah.
Wow, I see there's a message in there, but thank you very much.
You're welcome, and thank you for inviting me.
It's been a pleasure.
Yeah.
All right.
It's been a pleasure also for being here.
Right, so our 2-minute tip, as you all know, before the end of the show, we give you a 2-minute tip that can help you navigate whatever space you're in. Today, we're talking about registering for taxation, specifically for your business. If your company or business has not yet registered for tax, these are a few of the documents that you will need. These are actually the documents that you will need to submit to BURS. There is a form called the BURS1, and this is the application form on which you will fill in the details of yourself and your organization. Secondly, you will need your company extract, which you can get from the CIPA, Companies and Intellectual Property Authority website, but I'm sure you have your extract filed. Thirdly, it's your certificate of incorporation. Ensure that you have your certificate of incorporation with you. Number 4, you are going to need a letter from your bank which authenticates or actually does show that you indeed have an account with the bank and who the signatories of this bank account are. And then, of course, number 4, you will need certified copies of your IDs. In this case, it's your Mang if you're a national, or if you're a foreign national, you should have certified copies of your passport. And this is for authentication to show that, okay, whoever the directors are do indeed have their IDs right. Yes. And I think I forgot the share certificate. They will need a share certificate. So these are the documents that you will need. Briefly, once again, the BURS1 form, your company extract, your certificate of incorporation, ID documents certified, and your share certificate. Yes, and the bank letter. Yes, and I understand that you can do it online now?
Yeah, you can do it online. It's faster.
All right.
It's, within a week, you have your tax registration number.
Wonderful.
So what you need to do is just go into the BERS website.
Yes.
There you have an e-services. At e-services, go to e-tax.
Okay.
Then you have to first register as an individual.
Okay.
Register. Then register the company under yourself. So in registration, you will need, apart from those documents, you will need those documents, yes, but there is an e-services application form.
Okay.
And there has to be a letter that authorizes you to be the super user in that account if it's for business.
All right.
So you will send those documents to e-services support at best.org.bw.
Thank you so much. And those documents, the form, the letter, they are there on the website?
Yeah, there's the letter you have to prepare and say I'm
Okay.
appointing so and so
All right.
of ID so and so,
Yes.
whose user is so and so
To be
my super user on e-services. Then the form is on the website. You can
on the
download
website.
from there.
Yeah, there you have it. That's your
Yes.
2-minute tip. Let's show that we get our taxes in order. Ladies and gentlemen, thank you so much for your time. We really appreciate it, and we look forward to more informative interviews like this on this season of Big Budget Business. So from me, Big Budget, and the team, it's good night and God bless. And never forget that you were born for so much more.